Welcome back to another Chart Nerd TA video. Today I am diving into Everdome to start with. Now I will probably do daily updates on Everdome in the near coming future and a few other altcoins as well, Bitcoin, etc. But yeah, this is the one that I first wanted to dive into today. I've been monitoring it now for a while, you know, since we came down to these lows. And so far, so good in my eyes. Okay, so far, so good. So what I first wanted to start off with is these EMAs. So I mentioned the other day, okay, I posted a video a few days ago where Everdome was running back into this resistance point, okay, from this Adam and Eve double bottom. And I said, right, okay, if we get the close above this 20 EMA here, we're looking for a push up to the 55. Now, we've ran shy of that 55 so far, but what I wanted to show you is that we still have the potential to get up there. And why I feel that is because from this low, okay, you had the wave 1, a wave 2 pullback, you've had a wave 3 impulsive wave, you're looking for a corrective wave 4 falling back to support on this previous resistance, turning that to support, and then getting your 5th wave where you take out this high. Okay, and you come up to this 55, you eventually come up to it, and then you've had an Elliot wave, 1, 2, 3, 4, 5, an impulsive 5 waves, 3 impulsive waves up, 2 corrective down, but you're basically flipping the switch and moving to the upside. Okay, so I said as well, when you get this much distance between the EMAs, okay, between this 55 and this 20, you start to see a retracement back up to the EMAs. They're like magnets, okay? I've said this in most videos. So for me, key areas of support right now are this trend line, okay, which was previous resistance. We came down from it, we broke out, ran into a technical target, and we're coming back for support. We need to hold this trend line as support. Now, I'll show you that the technical target has already been met as well, because the technical target for me from this breakout of resistance, this resistance line, is from there to there. And you can see that wherever them broke out, it literally met the target to a T. I gave you guys this trade in the charts. You know, I said if you're closing above the 20 and you're breaking this resistance, expect a long up of this double bottom pattern up to this price. Okay, so you know, not to blow my own trumpet, but right now I do feel like Everdome is in this sort of correction here of a 1, 2, 3, 4, 5. It's in a wave 4 correction of an Elliot wave 1, 2, 3, 4, 5. Okay. But this is only valid if we hold this trend line, and I'll show you why. Because getting a fib on from this high that we've come up to now and retracing back down to these lows, you will see that the 050 and the 0618, okay, the two key points where you want to retrace and hold on the fibs, these areas right here, basically tie up with this trend line. Okay, the 050 closer to it, if anything. Okay, but the 050 at 0.00215 is where we want to hold. We want to come down, get a bounce off that there, and start to get continuation back to the upside. Equally, within saying so, I mean, you can also come down to lower levels of the fib, okay? So say, for example, in the daily here, we started to come down and retest the 702 and 786. That's also a big potential, and you would still be holding structure because you're not losing this low. So even if you was to do something like this, where you come down to the 0618, get rejected by the 382, for example, and push down to the 786 and hold that, you've still got a low and a higher low, okay? And you're still holding bullish structure. So it's all about support and resistance. It's about breaking this high and holding this low. Okay, that's all it is. It's very simple. That's all it is. It's a game of support and resistance. And right now, if I look at the 4-hour time frame, keeping this fib on, what I think potentially is happening here is on the smaller time frames from this low that we're currently retracing to from this high. So we're at this high, retracing now to this low. We're looking for a high level of support somewhere. What you had is a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5. Elliot wave theory, impulsive wave up on the smaller time frame. So right now, in my eyes, what we're potentially looking for is an A, a B, which we've just formed now because we're getting rejected by the 382 over here, okay, and we're coiling up between that and the 050, an A, a B, and potentially a C wave down. Again, as I said, to the 702 or 786, if you lose the 050, these are your lines in the sand. These 4 Fibonacci targets, okay? Because if you even come down to the 702, as I said, what you'll be doing is you'll have a low here, you've got a high up here. If we start to retrace down to the 702 or 786 and create a higher low, you've got a higher low than the previous low. You've got a local high, a higher low. All you have to do is come up and break this high and put in a new high. And again, you're in this impulsive move to the upside where you're holding support, higher levels of support, and you're breaking through resistance. So for me, that's the technical target, where what we're looking for right now is some sort of ABC on the 4 hour where you come down and hold support on these fibs, okay, somewhere on these fibs, and you get a break. Okay, you get a break. Where this C leg ends, I'm not to say. Okay, but as I said, if you're looking for support here, we need a higher low than this low. So we have to hold these fibs. If we start to come down and lose these fibs like this, fall through the fibs, hitting our heads, and we come down and retest this one fib and lose that and turn that into resistance, it's very negative, and you've got targets to the downside. Okay, so my targets to the downside, if this upside ABC doesn't hold and we get continuation, my targets to the downside would be straight off the back at a minimum the 1272. Okay, because once you lose this one fib right here, if we come down like this, start doing this and losing this one fib, as I said, the next target at a minimum is the 1272. If you lose that, it's the 1414. You lose that, it's the 1618. Okay, and these are all probable targets down here if we lose this one fib. So that's just what you need to watch out for, guys. Okay. Now, as I've said, I think we've been in some treacherous downside for a very, very long time, and it's about time that we started to see some sort of moves to the upside. You can see here for Dome as well that from this low, okay, that we put in on the 7th of September, is that yeah, that is the bottom. So that's the bottom that we have right now. You've come up in this impulsive wave, okay, you've got a high. You came back corrective, you formed this low. Okay, you came up impulsive, you formed this high. As long as we can adhere to this structure where you've got a low, a higher low, a high, and a higher high, it's good news. As I said, all you need to do is come back and form a higher low in a C wave of this ABC, then this low, and then come up and break this high. It's how it works. You got a low, high, higher low, higher high, higher low, higher high. It's you know, it works in waveforms, and right now it's looking beautiful. It is looking beautiful off the bottom. So straight off the bat, what I can see here, again, looking at Elliot wave theory, okay, for a potential play here, because we're off this bottom, okay, we're going from this bottom, we retraced to this high, from this low, we were going back up to this high, and you can see that we broke the high, okay, we closed above it, all right, but we wicked up to just shy of the 1618, which was my technical target. We was just shy of that, okay. So fair play if you was in that trade. But right now, as I said, you're looking to come back for support somewhere, i.e. on the daily, you'd like to hold the 20 EMA. Okay, it'd be lovely to turn the EMA into support instead of having it as resistance as we've previously had. And it'd be very good to see that. Okay, it'd be very, very good to see that. And potentially that 1618 still might get met. Okay, because it's not been met yet. As long as this daily 55 is creeping down and our price is being drawn up, okay, we're going to get drawn up to these EMAs. Because of the gap. Again, I've mentioned about the gap between the EMAs, guys. When you've got this massive gap here between the 20 and the 55, they're like magnets, and the price starts to draw you back up to them, okay, as resistance. So this, in my eyes, I still believe we're trying to reach this 55. And why I think that, again, is potentially off this low. You've got a wave 1 into the the daily 20 EMA here. You've pulled back, got a higher low. You've broke the 20 in this impulsive wave 3. You're coming back in a corrective wave 4, looking for support for your final 5th wave up to test that 55. It's a big potential. It is a big potential. Let me get the volume on as well. I want to see how the volume's still looking today. You know, so volume, as I've mentioned, since these lows over here, this bunch of volume is a lot more than what it has been in previous times. Okay, so there is a lot of talk or chatter or whatever, investments, people buying in. There's a lot more volume than there was in the previous months. You know, and it's a good sign. It is a good sign. Okay, so in my eyes, again, keep your eyes on that, guys. Just to finalize before I go, my downside targets right now, we're looking to hold support within an ABC, corrective wave 4, 1, 2, 3. Right now we're in corrective wave 4. As long as we hold these levels of fibs, okay, within this sort of A, B, C, and we come down and hold that, okay, you can see that we'll be coiling up in some sort of larger ascending triangle pattern, okay, where you've come down to low, resistance, come back for a low, and eventually break out. Okay, that's the bullish scenario. If we hold higher lows, guys, okay, and hold these fib retracements within this, what I believe to be an ABC correction from a 1, 2, 3, 4, 5 on the smaller time frames, it would be golden, okay, to see those hold. The downside targets, again, if they are lost, if we come down and lose this low and start to retrace through the fibs here, okay, and fall down and lose these lows right here, okay, my downside targets at a minimum are the 1272 to the 1618 for Dome, okay, of which would be from this low, if this low was lost, it would be a further downside of around 35%, okay, but you know, I'm going to monitor this moving forward. I would like to see these fibs hold within an ABC correction to get our corrective wave 4 out the way before we get a wave 5 impulsive move up to this 55. Okay, and as I said before, giving confirmation that you've broke above the 20, you've closed above it, you've come back to it for support here. All we need to do is retest this previous breakout trend line. Okay, right here where we broke out before, we need to hold this as support. Okay, we kind of need to hold it as support, because if you start, again, as I said, if you start coming down and turning your head into resistance and not holding these higher lows that we need to hold, it's going to be negative. You're going to come down, retest these local lows and hit these targets down here. Okay, so that for me is what I'm basically looking at. Okay, now for upside targets, as I said, you've got the 1618 that's just been shy or has not been met yet. If we do come back for this A, B, C correction and hold support, my next target is the 1618 up here at 0.00316, of which this 55 would be creeping down, and you'd be coming up to actually retest it in this 1, 2, 3, 4, 5 Elliot wave theory impulsive move to the upside. Okay, guys, so that's my technical targets for you today. I hope you enjoyed today's content. Simple, basic, effective EMAs. You know, keep it sweet. Until next time, guys, from Chart Nerd TA, peace out.